Hello, Lomita. It's February already. Where did 1/12 of the year already go? Well, the real estate market has changed. Let's first take a look at the numbers and then stick around to the end and find out how you can take advantage of the current market. The median estimated home value here in Lomita is at $847,000, which is up 2.05% over last month. It's down 4.82% over the last quarter, but it's still up 0.94% over the last year. It's up 15.33% over the last 2 years, and it's up a substantial 22.33% over the last 36 months. So the short-term peak of the market was somewhere in the middle of last year. And if you remember, last year was absolutely crazy, with people paying well above asking price to purchase a home. Prices have softened since then, but it's nowhere near the doom and gloom market crash the media likes to talk about. We can also see that we're still up 15.33% from 2 years ago. Remember that historically homes appreciate only about 3.5% to 4% a year. So we're still doing pretty good and well above average for home values. In comparison, the median value in Los Angeles is $814,000. In California, it's $741,000. And for the entire country, it's only $342,000. If you want to find out what your home's worth right now, go to housesinsouthbay.com and get an accurate valuation. Or leave a comment below and I'll send you a free report. Hello everyone, Steve Huhta here from housesinsouthbay.com, bringing you the Lomita Real Estate Market Report for February 2023. Now, remember to like, subscribe, and especially share if you find this of value. And please comment below about what you think is going to happen in the market. It really helps me with research and answering your important questions. So, looking back in January, we had 18 homes for sale in Lomita. Out of those 18 active listings, only 3 sold, and we had another 5 pending. Those 3 that sold range from this 3-bedroom, 1.5 bath, 1,477 square foot home on a 5,643 square foot lot that sold for $799,000. To this 2,182 square foot home, 4 bedrooms, 2 bath on a 7,886 square foot lot that sold for $1,200,000. Of those 3 homes that sold, all 3 of them went for less than asking price. Now, we know that prices going up and down is a factor of supply and demand. And if you've been following the news, we know that demand is way down, as we can see with the only 3 sales in January. And that's because of uncertainty in the market, mainly due to rising interest rates and inflation. So we would think that shrinking demand would, of course, push prices lower. But let's take a look at why values actually went up this month and why we don't think prices will crash in the near term. Well, it's the supply side, which is a combination of new listings coming into the market and existing inventory already sitting on the market. Looking back all the way to 2008, we can see that new listings are at some of the lowest levels in the last 15 years, and that existing homes on the market are also near the bottom. So yes, demand is low, and demand is dropping faster than supply. So that's why we saw those price drops. However, we believe that as we get used to our current interest rates and inflation, demand will rise and keep the market stable, and even maybe go up a little this year. Now, a factor of supply and demand is how long sits home on the market, which is averaging 35 days right now, with a median of 41 days. But the best way to look at how the supply and demand balance out is with inventory months of supply, which right now is at 2.1 months of supply, showing that supply and demand are still fairly balanced and that prices, at least for the short term, should be stable. If we see that inventory level go up to about 3.5 to 4 months supply, that's when we would start talking about a stagnant market, and above 5 months, we would see a declining market. This is why it's important for your realtor to be on top of all these numbers. Now, we need to know how all these numbers interact to better advise our clients on how to price and position their homes when selling, and how best to help our buyers take advantage of any opportunities in the market. So even with a slowing market, low supply should for now keep prices rather steady. Now, at the beginning of the video, I talked about taking advantage of the changing market. For sellers, demand is less, so to maximize what you make from the sale of your home, You can't just put it up for sale like we used to a few years ago. To maximize the value, you need to prepare your home a little. Now, that can range from simple decluttering to doing some deferred maintenance, simple repairs, or even some renovations. You also need an active and aggressive agent to market your property to the most potential buyers out there. Now, if you're looking to maximize the value of your home, reach out so we can put together a plan that's right for you. And for you buyers, if you've been trying to buy for the last few years, then you know how competitive it has been to get an offer accepted. Now, you have a lot more strength in negotiating an offer that's right for you. Sellers who have been indifferent to your wants and needs because they had so many offers to choose from now have to be a little more accommodating to get their home sold for maximum price. Now, this may allow you to negotiate some assistance with the purchase, such as repairs or closing costs, or maybe even having the seller help buy down some of your interest. Yes, we keep hearing about interest rates, but remember, you're not buying an interest rate. You're buying a home. If interest continues to rise, you will have saved money by acting now. And if interest rates drop, you can refinance to that lower rate. If your plan is to live in the home for a long time, you shouldn't be caught up with current interest rates, but more on what fits your family's budget and needs. Even better for buyers, buying a home is a quality of life purchase, benefiting you and your family in many ways besides what it costs every month. Yes, it costs more right now to buy, but once that cost is locked in, it'll stay the same forever, unlike rent, which historically keeps going up here in Southern California. My final thoughts is that rising inflation is actually a reason to buy. A home purchase shields and stabilizes your largest monthly cost, your housing cost, against inflation. Rents will continue to rise with inflation, whereas a home mortgage will remain the same and build equity over time. History also shows us that once inflation is under control, we'll probably see lower rates, giving you a chance to lower your payments in the future. But don't wait until then. When the interest goes back down, prices go back up. And don't be afraid of all that media hype. No matter the state of the economy, you still need a place to live and build memories with your loved ones. Would you rather be doing that while paying off your own home or paying off your landlord's home? For questions on buying or selling or investing, contact me so I can help. Bye for now.